This is Carlos Garcia at Eng Garcia Properties. I'd like to welcome you back to our real estate blog. Thank you for hanging in there with us. It's been a little while since we've sent out a message, so we wanted to make sure that we get out to you all. The thing that's really had me my head spinning a bit recently is the movement in rates. There's been quite a bit of movement, and I'm trying to figure out what to make of it. Some articles have been published recently in the New York Times, Wall Street Journal, and Washington Post. Back on June 4th, a very good article came out that asked, will higher mortgage rates kill the housing market? Maybe not, it said. Well, some of the concepts involved there are that there's a sort of a tautological or circular logical loop when it comes to rates. It gets confusing as you think through what's happening and why. Well, just to sort of boil things down, as the economy improves, it becomes less important to make money cheap, and to stimulate the economy with cheap money, we see the rates rise. Rising rates can scare us if we're in the real estate market, whether as professionals or market participants buying and selling. However, if rates are rising, it should be the case that that is happening because the economy essentially is improving. Some of the rate movement that we've seen lately, I've heard mortgage bankers tell me, sort of appears to be outsized relative to the mixed news we're getting on the economy. It's not all good. There are signs that we are creeping forward, that the machine is cranking up. However, we all know that it's not 100% clear that we're out of the woods as a national economy. So it's very interesting as we observe rate movement that some of the things that might appear to put downward pressure on the market, rate movement up, are happening, in fact, because of other things that could place upward pressure on the market: an improving economy, an improving job market, a higher sense of optimism among consumers, consumer confidence ratings that are rising, retail sales improving, construction starts rising, and so forth. So obviously the powers that be are a lot smarter than I am anyhow, and are trying to find the right balance. But what I can tell you as a real estate investor myself is that if it becomes a little bit more expensive for me to buy a property because of rising rates, and by the way, rising rates are only moving the cost of financing a property up marginally, and do recall that we are coming off of some of the historically low rates ever, so even rate movement up to say 5 or 6% ain't the end of the world, but it does make the cost of real estate higher. So as an investor, I can tell you that while that doesn't make me happy, the thing that does make me happy is that presumably that's happening because the economy is improving. And the likelihood that people will pay me to buy my property if I wish to resell it or to rent it from me, if I'm a buy and hold guy, are the prospects for buyers and finding buyers and renters are improving. So it's a mixed bag. I clearly am not providing all the answers with this entry in my real estate blog. I'm actually raising more questions than I am providing answers, but I guarantee you that we are following this, and as we are able to give you more of a numerical relationship between rate movement and the impact on sales or rentals, we will do so, because this is something that we're watching closely at Eng Garcia Properties. As you probably know by now, we are data-driven. We love to research the real estate market. We're constantly communicating with professionals in the field, whether they be economists, mortgage bankers, or productive realtors who have a lot of anecdotal information. And our pledge is to continue to be as thoughtful and investment-minded as we can on behalf of the followers of our blog. So I'd like to thank you for joining us, and I'd like to promise you that if you continue to do so, we will provide more food for thought. Please call us if you have any questions about buying or selling or renting real estate. We're at 202-290-1313, and we really do appreciate your following us. Cheers.